good morning, fellow traders, and welcome to today's live trading session. As you guys know, today is May 24th, 2023. It's a Wednesday. It's the middle of the week. And what we're going to do is look for some decent, trading opportunities in the market. I know for the first part of the week, it's been kind of weird as far as price action, a lot of indecision. We had debt ceiling issues looming over the market. And I know later on today, we have also FOMC meeting minutes. I know Marvin, he's going to touch on that later on. But for the most part, if you stay disciplined and you know what you're doing, you should at least find some solid opportunities. Or, even if you do have losses, just use good risk management, money management. But with that said, I guess we can move forward. But yeah, good morning, everyone. Good morning, Adam. Good morning, Stuart. Good morning, Naomi. Good morning to you guys and everyone who is in attendance. But what we're going to do right now, we're going to go through these day trading setups. We're going to focus on that initially. And then Marvin's going to talk about what's happening economically, fundamentally in the market. And then from there, we may see we can do some top-down analysis and see if we can identify some high probability setups that may be forming over the next few days. We'll see if we have time, because I know we definitely want to open the private war room. Of course, if you guys want to trade with us, you can by coming to that war room. As you guys know, we meet every day of the week for a few hours a day, and we actually find some good trading ideas. We execute some good trades in the market. So if you want to come and hang out with us, by all means, do that. I know Marcus, he's going to be in the room earlier, right after this webinar session, but I know we come in usually later on, about 30 minutes later. But for the most part, we will be there and we will all be trading together. So hopefully you can come with us and join us. With that said, let's look at this first pair that's on our radar for this morning is the Aussie USD. And we're currently looking at the 1 hour chart. And based on what we see on the 1 hour chart, should we be looking for opportunities to buy or should we be looking for opportunities to sell? Now, this is strictly based on the 1 hour. This isn't based on any other time frame, because if you're scalping, you may see something different. But on the 1 hour time frame, what should you be doing? Should you be looking to buy or should you be looking to sell? Or are we in a bullish environment or a bearish environment? You can answer it however way you want to answer it. But for the most part, what we want to do is assess and see what the market is doing based on price. Remember, price is our most important indicator. And I know, Joe said sell and Robert said sell and bearish. Exactly. You definitely want to look for a sell opportunity. It's in a bearish environment. And even if you draw in your waves, let's say we draw in our waves and we have a equal high right here, lower low, lower high, and then we have this huge low right here. So, the very fact that price broke this low means we're in a bearish environment and we need to look for opportunities to sell Aussie USD on a pullback in price. So then that is what we're looking for right now on this particular pair. But we're currently bearish. The 20 SMA is sloping downwards, which means that we're bearish. Price is beneath this 20 simple moving average line. So we want to look for opportunities to sell. But before we do that, we want to see if there's directional confluence. We want to see if multiple time frames support a bias to the downside. All we need is really one additional time frame, which is really the next higher time frame. So you go down to the 4 hour chart, and what we see on the 4 hour chart is, yes, the environment is bearish on the 4 hour chart. We can see this nice impulse to the downside. And, what I see right here, because, as soon as I land on charts, I'm pretty visual. I see certain things as soon as I see it. And as I turn to the 4 hour chart, I saw this. You can get this move right here, and then we superimpose this right around here. What we have is what you would call a one-to-one measured move. It's a harmonic move to the downside. It's a measured move. What it proves is that there's symmetry and harmony in the market. And what this can also tell us is that there's a possibility we may see a deeper retracement. If we do decide to sell, we may get a deeper correction. So we need to bear in mind that notion that we may see a deeper correction, likely a 4 hour pull back to this zone right here. Let me just draw this in. We have this zone of 4-hour supply right here, which price could very well test. So I'm just going to draw this in, just just for us to know. But for starters, we are testing sort of like an area of 4-hour demand to some degree. This could be structure, but let's go down to the daily, or go up to the daily and see what we see there. Okay, so right now we're looking at the daily, and on the daily it's more clear this is a zone of daily support or daily demand. So then we definitely want to identify that level. So then let me just do this right quick. I'm just going to do it from here to here. This is our zone of daily demand, and we're just going to make this color. So then what we can expect is a bounce from this zone, some sort of correction. And the very fact that it's a daily support or structure level, we may see a 4-hour correction in price. So just be aware of that. We may see price give us a deeper pullback into this particular zone right here. Something like boom, boom. And then, for the sellers to come in. Let me make sure I change this. So then, we may see something like this, a correction up into the zone, and then a price can come down, retest this zone as support. But what we will want to do is close out our position right around this area of daily demand, because we don't know if the sellers will exceed the buyers, or if the sellers will beat the buyers that's in this zone right here. So then, we want to usually take either partial profits or take your complete profit at this particular level if you do decide to trade it this way. Now, we began on a 1-hour chart. That's where we began. And let me see where things are in hindsight in light of what we see on the 1-hour. And yeah, this could very well happen on a 1-hour. We could see a deeper retracement up into the zone. Of course, we do have this area as well. This area right here of hesitation, where we have this hidden structure right here. So price could very well test this area, and then we could see the slide lower. There's a possibility, but for the most part, it's this whole area, this whole zone that we'll be paying attention to. So then what I'm going to do is just, of course, mark down these zones. And we're just going to be prepared for whatever happens. As we get a retracement into this zone, look for an opportunity to sell. We could get a deeper retracement. Let me just draw this in. Deeper retracement, and then we could see a sell-off. So in either case, we'll be looking for either sell down to here, down to the lows, or, price may correct deeper into the zone, and we can see an opportunity to sell right here. But what we want to do is look for opportunities to sell. The order flow and the bias is to the downside for this pair. So that's what we want to look for. So for Aussie USD, we want to look for opportunities to short this pair. So yeah, I think Marvin has a few things he may want to share. Yeah, I just kind of want to briefly touch on the Australian dollar in particular, and just kind of show you guys, just in a sense, or just, I guess, explain to you guys fundamentally what this currency represents, and how it's tied to, of course, we know it's tied to China. It's a proxy for trading the Chinese Yuan, but it's also reflective of a slowdown in manufacturing. So then the reason why I want to point this out is because earlier this week, we saw a slew of data come out in the manufacturing, with the manufacturing PMIs, or the flash manufacturing PMIs. And we all know, if you did see the numbers that they came out in contraction territory, they were quite mismatched from the services sector, where we still see the services sector globally expanding, but the manufacturing PMI, the manufacturing sector globally, has been slowing down. And really, the reason for that is because, like, the manufacturing sector or manufacturing PMIs are more cyclical. It's more, instead of, services sector, which is more durable. And typically, the manufacturing sector always leads the recession before we see the breakdown in the services sector. So then what we see here is the Australian dollar, which is tied to commodities. And we know that commodities serve as the raw inputs when it comes to manufacturing. When you manufacture goods, you need raw inputs to go into making goods and manufacturing. Well, The Australian dollar, what we see here with the sell-off in Australian dollar is really reflective of the global turnover in demand and the global slowdown in manufacturing, which would eventually reflect in trade and just other areas, and eventually the services sector. So I just kind of wanted to point out what we've been seeing for the past few weeks with the Aussie. The Aussie has been deteriorating for the past few weeks, which really could be a sign and a reflection of a turnover in global demand and a slowdown. So then we're seeing the slowdown in the commodity sector. We're seeing eventually, you know, I may touch on a little bit, but we're seeing commodities start to weaken as well as global demand slows down. And China is definitely highlighting that. We're seeing recessionary signs in China. So then, just like we said before, when China sneezes, the rest of the world catches a cold. So in some way, it's going to impact what we see happening across the board. But I just kind of wanted to point out, you know, just that we like in a fundamental sense, there's a reason for what we see technically with the price action. We know that the Australian dollar is tied to global demand and even global trade turnover and global trade as well. So then as the world and global economy slows down, that would be a good opportunity to, you know, to sell the Australian dollar. But yeah, I just kind of wanted to point that out.
Yeah. And you know, as we mentioned before, Australia, their economy is an economy that's known for producing hard commodities, and you need hard commodities when you're manufacturing. So, you know, you can see the correlation there. Whenever you see manufacturing numbers go down, you know, you'll typically see Australia hit to some degree because those manufacturing companies and those nations aren't importing as much hard commodities to support their manufacturing. So then typically you'll see the Aussie slide or dip as a result of that. But for the most part, we're bearish the Aussie. We're bearish the Aussie. So whatever you trade with, make sure you sell the Aussie in comparison with that particular currency. In our case, it's the Aussie USD. So, yeah, we want to look for a sell opportunity on Aussie USD. The 1 hour is bearish, the 4 hour is bearish. That's where we have directional order flow at the moment, even the smaller time frames. But you want to look for opportunities to sell Aussie USD. So if there aren't any questions, I guess we can move on and move to our next setup or opportunity.
Talk about it, validation.
Well, yeah, I guess we could talk about that. I know for this one right here, it may be a little bit confusing because you know, we have two different setups. We have this play on the 1 hour and we have this play on the 4 hour. But for the most part, what I want to do, I'm just gonna look for sales until price. Well, really, I'm just going to say this is our invalidation zone right here. This is our invalidation area right here. Let me just draw this in right quick. Right around here. This will be our invalidation level. So if we see price break and close above this level, then we want to be cautious on selling. What I typically want to see is a break back below this level before I decide to get in. In other words, for those who are new, this is what we like to see. Let's say price pushes its way and corrects its way and we get a break to the upside up above this level. Then I don't want to enter a sell until I see price break and close below this level. And then from there, we may see a pullback and then we can ride the move down. But for the most part, you know, if price breaks and closes above this invalidation, we do not want to look for sales. We only want to sell when price is below this level, if that makes sense. So, of course, we'll go over that in more detail later, but this is an invalidation level, and we'll see what happens. You know, but yeah, that's what we typically do for this pair. But anyways, if there aren't any questions, we can definitely move on to our next pair, which is what? Let me check to see what I want to go, where I want to go to. You know what I'm going to do on this one, I'm going to do this one from a top-down perspective. Let me go to CAD on this one. Let me go to the daily chart first. I'm just going to do this a little bit different. And on this one, really for all of them, I could do the same thing, start top down, because usually you learn better when you start from the higher time frame and you work your way down to the lower. Really, that's how you should do most of your technical analysis. Most of your technical analysis should always begin on a higher time frame, and then you work your way lower because you need a bird's eye view
of everything, like a macro bird eye panoramic view of the market. So anyways, let's just move on. So then right here, I know I have these levels already drawn. This is our daily zone of resistance or supply, you could say, but price came up, tested this area. Yeah, this is after making almost like a one-to-one measure move. But right here, we see that price is overbought in this area, right? And look at these most recent candles. Are these most recent candles in this area, the most recent candles right in this zone that I'm drawing out right now, right within this rectangle or square or box that I just drew? Are those candles moving up? Are they moving down, or are they moving sideways? Let me just see if you guys can answer. Are they moving up? Are they moving down? Or are they moving sideways? It's pretty obvious. It's pretty obvious, guys. I don't, I know you guys know, but I'm just going to, ask that simple question because someone may not even know. Someone may be new and they may not know anything. But I guess for the sake, since no one is responding, I guess I can come forward and tell, or maybe say or state what is happening. I'll give you guys a few seconds to maybe chime in. Okay, yeah, but Robert said sideways, right? Okay, yeah, exactly. Price is moving sideways on these candles. These are sideways moving candles right here. These candles are not making higher highs. They're not even making lower lows. They're just strictly moving sideways in the range where this red candle right here is considered a mother bar. This red candle on Friday, May 19th, is considered a mother bar, but it's moving sideways. So then what does that typically mean, right? Whenever you see something move sideways like that, what does that typically let us know? Or what could be happening on a smaller time frame? I'll give you guys a few seconds to chime in. Whenever you see this, what could be happening on a smaller time frame? Like, for instance, what could be happening on a 4-hour? What could be happening on a 1 hour? But you need to understand price action, not only just from impulse waves and corrected waves, but you have to understand what the candles are doing as well. I think we mentioned this plenty of times, but of course, Brian said going up and down repeatedly. Yes. So then when price does that? What is taking place? You are correct, Brian. When that happens, what is price doing? It starts with a C word. It's, yep, consolidation, right? It's consolidating, or it's topping. It's going up and down repeatedly, like Brian mentioned. What we could see is consolidation. We'll see something like boom, 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 boom on a smaller time frame. That's what we'll typically see. So, of course, that's what we call topping. That lets us know that momentum could be slowing down and we could see a move to the downside, a correction lower. So I'm thinking price will correct lower soon, and it can correct lower down to this area of structure right here. But that's another topic in itself. What we need to do is go down to the 4-hour chart and see what is taking place. And as you guys can see, let me delete this because we don't need this right here. But as you guys can see, price is in the middle of a consolidation phase, right? If you was to look at this right now, what type of consolidation pattern would you see right now based on what we see right now? And there's no right or wrong answer. But we definitely see, let me just draw this in. Price went up, down, up, down, up, and it's on its way down now. But what could be forming? Let me just see if you guys can see it. Yep. Adam said double top or in pattern. Exactly. Or, whatever you want to see. Remember, guys, with these topping patterns, I know there's different names for them all. But, I mean, when it's all said and done, because some people may see something different. Some people may see, well, I see a triple top. I see price test this area 3 times. Right here. Well, first time right here. Second time right there, third time right here, fourth time right here. They may say, I see a quadruple top. I see a triple crown. Like, everyone will see something different. But what we do know is that price is in this phase of topping. So then sometimes you can just keep it simple and just say, I'm just going to draw a box consolidation across the entire consolidation or topping.
or distribution.
Or yeah, or distribution. This is what we call distribution phase, a potential distribution phase, because right now we see there's buyers and sellers competing for who's going to dominate, who's going to take control. But you could just draw a box across this whole zone and say, I'm not going to get involved in this trade until price breaks this box. You could do something like that, but we're not going to do that. But I'm just saying hypothetically, that's something you could do because price is topping and consolidating, or in this distribution phase on the 4-hour. If you want to trade the 4-hour time frame, you could look for price to either break the lows down here, the neckline, or break the highs up here. But yeah, we're in a distribution phase. But anyways, let's move on because we want to find a day trading setup. We're not looking for swings. We want to look for day trading setup. So even in this day trading setup, what we have to acknowledge, or even in this particular pair, what we have to acknowledge is that price is heading towards an area of 4-hour demand. You see this candle right here with this nice long wick right here. I don't know if you guys see it. This candle right here with this nice wick right here is letting us know where buyers are on this particular pair. So then we don't want to ignore that. We want to acknowledge that that is an area of potential 4-hour demand. So what we can do is just place something right here, 4-hour demand right there. Okay, so we know that. Now let's go down to the 1-hour chart and let's see what's happening, what's taking place. So go down to the 1-hour. This is what we see. Let me just hide this, make this not as visible on the 4-hour. I mean, make this only visible on the 4-hour. Let me daily, and let's do from 3 to 4 hours, and do that there. All right. So okay, so right now we see this pair, and we see that price created a double top right here, or triple top on the 1-hour. This is what you'll typically see on the smaller time frame. We see price create this other topping reversal setup on the 1-hour. Price went down. So then what we can expect is a possible correction higher on the 1-hour to some area of supply or resistance, and then for price to correct and move to the downside.
Not correct. You mean expand?
Oh yeah, expand to the downside. Expand to the downside. My bad. Expand to the downside. But this is what we can expect. So then what we want to look for right now is structure. Where do you think the sellers could come in at? Well, let's just draw in a potential zone. We have this area of structure right here. We can look left. We can see that structure leaves clues. Look left. Historically, we can see that this area was respected on a number of occasions, but we also have demand in this area. Right around here, we have this area of hesitation right here, this pause, this area of pause right there. So there's a possibility we could see price correct up into the zone and then start reversing. And if that is the case, then we can have what you would call two targets, because we can't ignore the fact that this is an area of 1-hour demand, right here. We can't ignore that. Price is reacting to this area for a reason. There's a reason why we're seeing a bounce from this area. So then, we can call this 1-hour demand right here. But we're in this consolidation phase. This one right here is a little bit risky, this trade setup. But if you do decide to get involved, what we would do is simply wait for price to come into this zone. And you want to see a particular type of pullback. Remember what we always say. You want to look for a 3-wave correction up into this zone. And then from there, you can look for a sell, take your first target right around here at this area of demand, and then your second target, if you want to, you can hold it all the way down to this 4-hour demand, because what we're assuming is that price is reversing on the 4-hour. Remember, we saw that those sideways moving candles on the daily, that shows that price and momentum to the upside is slowing down. So we can expect a deeper impulse or expansion lower, soon. But will that happen in this zone? Well, only time will tell. For all we know, price could very well go all the way up here, test these highs. And that's the reason why you want to wait for bearish confirmation. As soon as price reaches these zones, you don't just want to get in. You want to look for bearish confirmation or something on a smaller time frame before you decide to pull the trigger and execute that sell on this particular pair. But I'm going to keep my eye on this one just to see what happens with this particular pair. Look for a sell opportunity. However, if price does break and close above our invalidation zone, which in this case will be, it will be, yep, it will be right here in this area. Let me just draw this in. Right here at the midpoint of this demand zone almost. But right there, if price breaks and closes above this level right here, we want to abort our sell idea. Remember, this level is at 102.472. So if price somehow breaks and closes above this level, then we want to abort our potential sell idea. So yeah, we're looking for a deeper retracement. It seems like price is finding some resistance at this indecision candle right here, hesitation candle, which also acts as hidden demand. Let me go to the 15-minute to see what's happening on the 15-minute. Okay. Yep. Okay. So price is approaching this, but we don't see the three-way pullback yet. What we typically like to see is a three-way pullback: a leg A, a leg B, and a leg C, and then for the fall. We don't see that right now, so we're not going to get involved. Remember, about 70% of the time you'll see a three-wave pullback on these corrections. It's about 30% of the time when you don't see it. So then, you always want to make sure you see that three-wave correction before you enter a trade on a correction or pullback. So again, we're looking for price to correct into this zone. And then from there, we're looking to sell on bearish confirmation. And for some reason, I don't think this showed. Yeah, this didn't show on the minute chart. So let me just add that. But yeah, so then what we want to do is look for that correction and then trade that to the downside. First target at the lows right here. Second target could be at this 4-hour demand that we drew in earlier, because that's the neckline. That's where we saw this huge wick, from earlier. We know buyers are here, so we definitely want to be a little bit cautious. But yeah, this is CAD yen. Are there any questions about this one before we move on? Going once, going twice. This one right here was more educational, a little bit different, more confusing than this next one I'm going to talk about right now, which is the Aussie yen, right? Let's talk about that. The Aussie yen. The Aussie yen. All right. So right now we're looking at the Aussie yen. We're currently on the 1-hour chart, and something that I've been testing lately. I'll let you guys know, but I'm expecting price to bounce eventually from this area soon. get a nice bounce up, maybe to these highs up here. I've been doing some testing lately on something that I want to share with the group later on. But of course, just a simple way of just set and forget trading methods. But anyways, when price hits resistance, look for sales. When price hits demand, look for buys. But there's certain levels you want to look at. You don't want to trade every level. I'll talk about this later. I'm working on it, trying to modify a new strategy, just for those who may not have enough time to really look at the chart. You just want to have a way where you can make some money, and you don't have to be tied to the charts. It's a set and forget method. But anyways, what we can see here is that even on the daily, we see price has been correcting lower to the downside. So we know we're in this area of demand right here, and eventually we should see price push up and maybe test these highs right here. So then, of course, that could take place over the next few days or whatever. But that's what we're expecting on this particular asset. Let me close that. But if you look at this from a smaller time frame like the 1 hour, what we see is bearish order flow, right? We see bearish order flow on the 1 hour. Based on what we see on the daily, everything's bullish. Directionality is bullish. On a 1 hour, directionality is bearish. Order flow is bearish. So then you have to oftentimes stick to a time frame. If you're going to be a swing trader, be a swing trader. If you're going to be a day trader, be a day trader. But what I wanted to do in that last example was just show you guys just a simple approach. If you guys work a 9-to-5 job and you don't have time to really look at the charts consistently, then a simple strategy like trading certain key levels on the daily chart can actually do you well. But anyways, let's move on. So then on this particular pair, we see that the market environment is bearish, right? It's pretty easy to tell. Price is making, of course, higher highs, higher lows, higher high, higher low, higher high, comes down, makes a lower low, lower high, lower low, higher high, and comes all the way down and makes a lower low when it breaks this low. So we're definitely in what you would call a bearish environment on this particular pair. So we want to look for opportunities to sell. Order flow for the near term is to the downside at the moment. And if you look at the 4-hour time frame, we can see the same thing. 4-hour is showing us that order flow or directionality is to the upside, to the downside as well. But we have to bear in mind that we are approaching this area of demand. We can see this was an area of demand on the daily, but it's also an area of demand on the 4-hour chart. So then let me just draw that in right here. We see this area of demand right here, and price is reacting to this level, right? So we could see buyers come in and eventually push price all the way up to these highs, which is what I'm expecting, which is why I had that order right there, something that we're testing. But anyways, again, on the 4-hour, the order flow directionality is bearish. We see price make a double top right here, or M pattern, and then expand to the downside. We got an oversold condition right here. Therefore, we're looking for some type of correction to take place in the market. And in this example right here, we may see a deeper correction than the 1-hour correction we're anticipating. We may see price correct all the way up to this area of supply right here. This is 4-hour supply. We may see price correct all the way up to this area, and then we can see the sellers come in. So, I'm just being prepared for that. But anyways, let's go down to, or go up to the daily. As we mentioned before, on the daily, environment is pretty much bullish on the daily. So then this is what we have. We have 1 hour is bearish, 4 hours is bearish, the daily is bullish. So guess what time frame we want to trade on for the near term? We want to look for opportunities to sell. More time frames are bearish than bullish, as we speak. The 1 hour is bearish, 4 hours bearish, daily is bullish. And then we want to look for opportunities to sell. We will look for an opportunity to buy later on. Now, if you're using this secret swing trading approach, then that's different. That's a different story. And it's not really a secret. There's really no secret when it comes to trading the markets, really, in all honesty. But for the most part, if you're day trading, you'll be looking for sales. Even if you're swing trading, you're looking for a 4-hour pullback as well. But anyways, let's talk about what we want to see. So again, we have certain key levels. We have this area of 1 hour supply. You could say right here in this area. And we have supply up here as well. So then, there's a few ways we're going to look at this. For one, price could very well correct into this zone, and we could see a sell-off. Price can come into the zone, and then we could see the sellers come in and cause price to correct or expand down into the zone. Confluence with the 20. Yeah. And and I don't know if you heard Marvin in the background. We have confluence with the 20-hour moving average right here as well. So this is an approach that we could take. So we could see the sellers come in right around this zone, but we can also see a deeper correction based on what we saw on that higher time frame. We could see a deeper correction all the way up into this zone, which is 4-hour supply as well. And then we can see another sell opportunity, or a sell opportunity from there. And with all these indecision, hesitation candles, my assumption is that we may see that. We may see a deeper correction, because usually when you see multiple hesitation candles like this, sometimes it could lead us to believe that, hey, we may see a deeper correction. But yeah, that's something that is a possibility. It's a possibility. But anyways, we want to be prepared for whatever happens. We have two zones where we could see those sellers come in at, right here in this zone, and right here up here in this area right here. So in either case, we don't know which one we will look into, but as price forms and develops, we'll have a better idea of which levels to use. But again, we'll be looking for sell opportunities. We'll be looking for a sell opportunity right around here, or a sell opportunity right around here. Now, I know some of you guys may be asking, but Melvin, where is your invalidation? And I'll talk about that in a little bit. I think Marvin wants to share something. I'll let Marvin share a little bit, and then I'll tell you where.
Well, I mean, like you can finish the analysis. I was just going to talk about how, in like a good portion of the chart markups or examples, you show that there's a plan A or a plan B. You show that there's two zones that we could see the rotation, or we can see price respond to, and the sell-off continue, because no one really knows for sure like where the bulk of selling is going to come in. You can identify with price, and based on the displacement from these levels, you can assume that it's going to, that one level may have higher priority over another. But like as traders, you have to be fluid, because no one really knows for sure. That's the reason why we're called, speculators. Like we're speculating on where we think price would go to, and where we will see the selling continue based on past historic data and what we see with the historic footprints in the market. So then in trading, you always want to have a plan A, plan B, and possibly a plan C and D. Like, what do you do if the plan that you prepared for doesn't work out? Like, are you fluid with your trading plan? Are you flexible? Are you willing to adjust to the changing environment, to what price action gives you in real time? Or are you just rigid and stuck with your trading plan and aren't able to deviate? So I just want to say, as a trader, you have to be willing to evolve and be flexible and say, okay, then if this doesn't happen in this case, then at least I can be prepared for what could happen next. You want to always think like 2 or 3 steps ahead, and be able to look at the market and say, okay, then I know where the supply and demand zones are. Now, what can happen when price gets to those levels, and how can I trade around those areas of support and resistance on the chart? So I just kind of wanted to briefly point that out, that, in most of the examples today, you gave more than one type of trade ideal or setup. You gave a plan A and a plan B, which we should have for every type of trade we execute. And even an exit plan. If you do execute a trade, what is the exit plan? How do you unwind? How do you unwind from that risk?
Yeah, you should have a plan for engagement, an entry plan, and you should have an exit plan at before you even make a decision. And that's that's good trading. You need to have an engagement plan, a plan that will cause you to help you enter, to know when to enter the market, but you should also have an exit plan as well. And that's where we set our stop loss, but we also have areas of invalidation where we can look for price to eventually find an area where we feel that, hey, if it breaks above this area, then we may want to abort our potential idea. So again, let me see, what do I want to do? Yeah, well, we can just do this right here. I'll just stick with this time frame. But yeah, for these areas of invalidation, what you could do, you can just simply look for price to break a common area of structure. And in this case, I'm just gonna do these lows right here. I was gonna do this area right around here, but that'll be where actually this is the better one, the better play. But anyways, let me just do the most recent one right here, just in case, because sometimes you may get a push and break above. And yeah, but that's at 91.556. So if price breaks and closes above this level, then we definitely want to see price get below this level before we start selling. So then let's just say that again, price pulls back, and then we get a break above this level, and then price consolidates a little bit, and then you want to wait. You're not in the sell yet. You want to wait for price to break below this invalidation. Once that happens, and then you just trade on a pullback. You get in right around here, place your stop behind these swings right here, and then you write it down. So that's typically how you want to do it. But for the most part, what we're doing, we're just looking for an opportunity to sell, and we need to be patient. We need to be patient. Now, whatever level we choose to enter in at will be determined by how price corrects into that area. The correction is what will help us to determine whether this zone will be respected or whether price will go up and tag this zone where we need to look for the sellers. So then how price corrects will help us to determine what level we want to really look at for our engagement or our area of interest, you could say. So I hope that makes sense. But anyways, for the most part, we're looking for a sell on Aussie yen. All right. And are there any questions about this particular pair before we move on to the next? I'm going to try to get through this really, really quick. Going once, going twice. Okay, I guess we don't have any more questions. Let me go to one that is very, very easy because of fundamentally what is going on, what happened. That's the Kiwi USD. We don't really need too much explaining there, but what we see here is this nice expansion lower. I think Marvin could probably explain what happened overnight during the Asian session. We saw an announcement come out that contributed to this major move to the downside, but we're very much bearish on this particular pair. Price was in this mode of consolidating up here, but then we had this nice strong expansion to the downside, and we're looking for obviously opportunities to short. You do not want to fight against momentum. But anyways, let's go up to the 4-hour chart. What does the 4-hour chart tell us? 4-hour chart is bearish as well. We see this consolidation, or really this complex correction, which was really like a bearish flag type setup. We saw what appears to be like almost like a bearish flag play. Let me just draw this right here. And price broke to the downside, and now we see price testing this area of 4-hour demand right here, right? 4-hour demand right in this area right here. So then we have this demand area that price could actually bounce from, right? It can bounce from this area and then start correcting higher. Now, let me do the daily. What do we see on the daily? Okay, so then even for the daily chart, it looks like momentum is, well, we're in this consolidation phase. That's obvious. You know, every time price hit these highs, we saw a move lower. And, you know, we could have probably, you know, prepared for this slide lower on about 2 weeks ago. I think we talked about how price leaves a footprint in these areas. There's repeatable patterns that happen in this area all the time. And, you know, I don't want to get into that topic right now, but what you would do, you'll drop down to the 4-hour and you'll see those patterns take place. As well, as a matter of fact, I could go through it real quick. If you go to the 4-hour chart, what you would see in this case, you'll see that price had this expansion correction. And of course, this was a complex correction, but we saw the break to the downside. So then price topped on the 4-hour, had a huge expansion. This was the corrective phase. We saw the collapse later. On every one, you'll see typically a 4-hour reversal and a collapse. So this is price broke, created a 4-hour reversal, then corrected a little bit, and then started trading to the downside. And you'll see it even for this last time. Price created this 4-hour reversal, head and shoulders type setup right around here. Saw price expand to the downside, correct, and collapse. So you'll typically see these footprints happen, you know, every time price hits a particular zone. Remember, the market leaves repeatable footprints on what can happen in the future. So then what about this footprint at these lows? Well, we can see here that price started consolidating at these lows and bounced higher. So then you can look historically and see when price made a low in this area, the same area right here. You see price. As a matter of fact, let me just expand left. Let me just do this so you can see this. Let me do style, extend left. So you can see every time price hit this zone, we started consolidating, right? On the 4-hour, bottoming on the 4-hour, right? Right here. This is the footprint that the market gave us. Tested this bottoming on the 4-hour. It had a double bottom right here on the 4-hour. Every time it tests this zone, you'll see that same repeatable footprint, that same pattern, because the market gives you clues on what will happen in the future. What was happening in the past, there's a likelihood that the same thing may happen in the future. So then what we can expect is some sort of 4-hour bottoming as well in this area. But, you know, what we're expecting is for price right now, since the environment is strongly bearish, for a pullback and then a retest of this level. And with this momentum, we could see price break even below it. In all honesty, we could see that, because just because we see a repeatable pattern in the past doesn't mean it has to hold and stay true all the time. We could see price pierce this level and then expand lower. But you know what we can see from this is that oftentimes price slowed down when price hit this area right here. So then we have to be aware of some type of reversal possibly taking place, right about now. So, with that said, what we're going to do is plan for our setup. So again, going down to the 1 hour, what we can do is look for an area where we feel the sellers can come in at. So you can either look at the movement down, you can look at price history, look to the left, you can look for whatever you need to look for in order to determine what to do. And I'm just going to point out a few areas right here. We have this structure area right here. And let me delete this. We don't need to extend left again. And let me make this orange right here. But we have this area right here, which could act as an area of resistance. Price can correct all the way up into this area and give us an opportunity. This is something that could happen with this pair. Also, what I'm going to do, I'm going to drop down to the 15-minute and see if I can find something on the 15-minute. So right here, we're on the 15-minute. And the reason why I want to do that is because this was a strong expansion to the downside, a parabolic move to the downside. And sometimes the more parabolic the move is, the more shallower the correction. The correction is not as strong. It could be a shallow correction.
Not as deep.
Yeah, it's not as deep. So what we want to do is identify an area where price could potentially find some demand or some sellers. So then right here we have this zone right here where we could see potential sellers come in at. So then this could be an area of hidden supply that we want to pay attention to. But yeah, we can look for possible sellers coming in right in the zone as well. So going back to the 1 hour chart, we have a few zones that we could look at. But yeah, we're looking for a sell opportunity. We're looking for price to correct up into this area and possibly look for a sell, or we could see price continue that correction and look for its opportunity to sell right here. Sometimes with these strong moves, you don't know. But we could see price come up into this area right here. Let me maybe expand this out a little bit more. Come up to this zone, and then we can find the sellers come in. So yeah, I just want to point that out. But yeah, this is this is Kiwi USD, guys. And we're only looking for an opportunity to sell right now because of momentum. It's strong to the downside. Now, we could very well also look for a buy setup soon, but we only want to look for a buy once price produces that consolidation and that break to the upside. As soon as that happens, then we could look for a buy. But for the most part, we're selling, right? 1 hour is very much bearish. 4 hour is bearish. There is no reason for us to look for a buy right now. We need the environment to shift from a bearish environment to a bullish environment before we commit to selling. But again, this is what we're looking for. A correction either into this zone or up to this high. And then from there, we'll look for either a sell right here if sellers come in, and or a sell right in this zone if sellers come in later. So again, a plan A, a plan B. And it's all based on how price will correct. All right. So let me know if you guys have any questions. Going once, going twice. Okay. So yeah, what I'm going to do right here, I'm going to let Marvin take over for a little bit, because I know we don't want to be on here too long. I know we have the live war room later on. So I'm going to give the mic over to Marvin, and he's going to talk about what he's observing in the market. All right. So yeah, here's Marvin. Yeah, excuse me. Just had to clear my throat quickly. But
Yeah, before I really touch on what I really want to cover this morning, I think, I want to mention, since we're already on New Zealand dollar versus US dollar, just to talk about what happened last night with the strong sell-off, the strong move lower. And that was primarily due to what the Reserve Bank of New Zealand did during the Asian session. They decided to hike interest rates by 25 basis points, which was pretty much already telegraphed and already sort of baked into the cake. The market had already discounted that the RBNZ, or the Reserve Bank of New Zealand, was going to hike rates. And we didn't quite know for sure if it was going to be a hike and a done, and they'll be done with their tightening. But pretty much what created this sell-off, some people are wondering, well, if they hiked rates, then wouldn't that underpin the New Zealand dollar? Shouldn't we see the New Zealand dollar rally to the upside as that premium gets added to the currency, as the purchasing power of the New Zealand dollar increases and raises whenever there's an interest rate hike? So, of course, in the textbook world, yes, that is the case. But you also have to look at the backdrop that it had already been telegraphed. So the rate hike was already priced into the current value of the Kiwi or the New Zealand dollar ahead of the announcement. But what really triggered the sell-off was some of the forward guidance, or some of the language, excuse me, that the RBNZ communicated in their statement. They pretty much said, well, we think this is the end of the tightening cycle. They announced and said, we won't be doing any more rate hikes. Actually, we won't do rate hikes or rate cuts until 2024. So then they're not trying to until the middle of 2024. That's what makes it interesting. They said they're going to keep their official cash rate at 5.5% until June of 2024, May and June of 2024. So then this is the reason why the Kiwis sold off, because despite pricing pressures in the New Zealand economy still being persistent, you remember they still haven't tamed the inflation beast yet. They're choosing to hold and keep interest rates in restrictive territory at 5.5%, hoping that the cumulative backlog of rate hikes that are still in the pipeline will do its work for them in actually tightening liquidity conditions and bringing inflation down. So for some of you guys that are new, I know this may sound kind of like jargon, and trust me, you don't have to really understand everything about fundamental analysis. We don't, of course, it's not expected for you to have a PhD in economics, or understand every reason behind why prices move the way they do. But I think it's important that you know this, that the reason why asset prices move where they move, the reason why stocks move how they move, the reason why commodities move in a certain way, is due to expectations of what that country's central bank would do with rates. And that's how prices move, regardless of what instrument or what asset class you trade. So that's the reason why we follow the Fed, the Federal Reserve, and that's the reason why we follow news that's on the docket. So let me ask you guys this: what news lately has been, or what headline has been in the news that has impacted markets for the past few weeks? I would say about 3 weeks. What news or what thing is lingering over the market, in a sense, or what issue? And there's a few that you guys can point out, but there's one major one that you hear all the time, and I'm just going to give you guys time to answer if you guys do know. Yeah, I know. Yep, exactly. Marcus is correct. It's the U.S. debt ceiling talks. And that's pretty much what's been really contributing to some of the weird price action we've been seeing. It hasn't been due to Fed members saying we're going to have higher rates. It's, of course, to be honest with you, it appears as if the market at the moment is adjusting to a world that has higher rates. It's almost like this could be a new norm. But like right now, the reason for the sell-off that we're witnessing, because we're actually seeing a sell-off in most of our stock indices. But yeah, for the sake of time, this is what I'm going to do. I'm going to actually go to FinViz, go to our heat map in FinViz. And let me see. Thinking. Oh. some reason they're not bringing this up.
Cancel and do it again.
Okay, let's see.
Hey, click on that. I want you to click on that first.
Okay, yeah, yeah, we're using this software. Okay, here it is right here. Oh, they changed it.
Mm-hmm.
Well, yeah, well,
that's it.
Yeah, this is it. Do you guys see this?
No, you gotta share it. No, that's the entire screen.
Yeah, that's the entire screen right here. Yeah, but they're not.
Yeah.
I guess we had to do it like this, and then share.
You shouldn't have to.
Yeah, I know it's not coming up, but yeah. For some reason, we just had an issue with the software, but yeah. Let me know if you guys see this web browser here. This is just homepage of a web browser. This is not where I want to go. I actually want to go to finviz.com. All right. Yep. Thank you. Okay. So let's go to financial visualization. And you guys know, of course, this is the heat map from yesterday. Let's just click on this real quick. And as you can see that across the board in all 11 sectors of the S&P 500, we could see that there's been selling, except for energies. Energy has been pretty resilient. It's been pretty sturdy because there's been talks of there being more OPEC cuts, even though we don't know for sure if that's going to have an impact. But we see energy is picking up. But for the most part, across the board, our technology sector, communication services,
which means the
financial sector, has been selling off. This is companies that are in the S&P 500 index in this particular heat map, because it's based on the 11 sectors of the S&P 500. But of course, some of these companies are in the NASDAQ, like, of course, Microsoft, Apple, Meta, Google, Nvidia. And, of course, yeah, most of these companies sold off. But let's go to today's future market. This is from yesterday's heat map. But let's just go to the futures market right here. And even though this is delayed by a few minutes, it still provides a clear picture of where sentiment is. So then, as you can see, when we look at this top row, where we see our equity indices like our Dow futures, S&P 500, NASDAQ futures, we see that they're in negative territory. And we see that if we look across the board, global equity futures have been selling off. So then we're seeing that there's this tone of liquidation. There's this tone of orderly selling in the market, and it's due for a reason. And the reason why we know that there's orderly selling at the moment and not panic selling is simply because of the VIX. We see that investors are choosing to hedge themselves. They're choosing to buy the VIX, which is the fear index or fear gauge, to sort of hedge themselves and insulate themselves from excessive losses. They're sort of trying to how can I say, be risk averse by buying the VIX. So then we see the VIX moving up, is at 20, and we see equity future indices moving down. And what's interesting is that we're seeing this pickup in crude oil. We're seeing this pickup, and I think a lot of it is due to signs of of course, we've been hearing word from OPEC leadership about them doing more production cuts. And this is on top of the previous production cuts that they had said they were going to do. But we're seeing this lift in energy at the moment. But yeah, we're seeing, equity futures sell off. I want to touch on also the cryptocurrencies. Let me go here because, even though this is lagging, we see that most of our cryptocurrencies are in negative territory as well, which could also be a sign of where equity markets could eventually go. Because, we touched on this in prior webinars, how like it wasn't supposed to be this way, but as more banks invest in Bitcoin, or as more hedge funds, institutional banks, sovereign wealth funds begin to rotate and buy and invest in digital assets, it's going to sort of be intermingled with traditional trading, even though it's a separate financial instrument that was supposed to be isolated from legacy markets, legacy financial markets. The cryptocurrency market is still somehow connected and related to market themes, risk themes. And if we see a sell-off, in cryptocurrencies, that could be a harbinger of what we will eventually see when Wall Street opens. So then, of course, we see cryptocurrency selling off. We see futures, we showed that selling off. And let's see what the Forex market is telling us. And what the Forex market is telling us is sort of pointing to the same thing that we're seeing. The sell-off in our commodity-based, commodity-leading currencies. We see the Kiwi, of course, is selling off the most due to the announcement last night. But also we see the Australian dollar following up behind the Canadian dollar. And you remember, we talked about how the commodity currencies are also tied to global growth and even global demand. And whenever we see global demand sour or deteriorate, we're going to see some of these commodity linked currencies also deteriorate, as well as the demand for these commodities end up softening simply because the world is moving towards recession. So we talked about the debt ceiling. Yes. So then the debt ceiling is what's really providing a lot of the fear and uncertainty in the market, because there's a possibility, even though it's kind of hard to say what's going to happen, because right now the threat, or our bond market, is in threat of being downgraded. Like the credit worthiness of U.S. treasuries and U.S. bonds could actually be downgraded or be lowered. So this is causing some fear, some concern. Will the U.S. government be able to pay out Social Security if they do aren't unable to come to some type of agreement in Congress on, how far to raise the debt ceiling, or what to do? Then months down the line, we can have issues with the government having to be selective and pick and choose which bills they want to pay first. And then there may be some government employees, they may not be paid first. They may not be first in line. So then it's going to definitely create some tightening and some definitely austerity in the market, which of course traders are sort of pricing in that fear now. But in either case, whether they do come to a compromise or resolution or not, there's going to be some tightening due to the raising of the debt ceiling. And I don't want to go into too much detail because I don't want to bore you guys with what the Treasury would have to do prior to them raising the debt ceiling, because they're going, when they raise the debt ceiling, the first thing they're going to have to do is replenish the TGA, which is the Treasury, their government account. They're going to have to replenish it by selling bonds. And when the government sells bonds, that's a form of tightening. So then there's going to be tightening either way. So in either case, when we get the announcement that there's an agreement, yes, we're going to see stocks rally, but probably a few days after that, when reality settles in, we're going to see eventually stocks tumble, as we're going to see that tightening work its way through the economy.
Then in regards to currencies, you'll see the dollar strengthen.
Yeah, and you'll see the U.S. dollar strengthen. So I know this is a pretty interesting spectrum, because right here, the three strongest currencies for today is the euro, the US dollar, and the Japanese yen. Now, the euro is sort of serving as a temporary secondary safe haven, which is interesting because really, to be honest with you, some of the data out of the Eurozone hasn't been too bad. Like, they've been able to endure issues coming out of the war. And, in Ukraine, there was just talks that in prior years that this would definitely hurt the European economy. But for some reason, the European economy has been pretty resilient despite, of course, the issues, the operation, a special operation in Ukraine. So, yeah, so the data has been coming out pretty sturdy. So it's serving as a temporary safe haven for now. But we see that and what's interesting is that the pound actually just jumped ahead of the US dollar and the Japanese yen. The pound was strong earlier in the session. I should talk about that due to the UK inflation data that came out. The UK inflation data came out pretty sturdy. It showed that the beast of inflation has yet to be, maintained. Pricing pressures are still increasing. So that means that the Bank of England may have to hike rates and tighten their monetary policy a little bit more. So that we saw that boost, that tailwind in the sterling once that news came out.
But then price did pull back.
Yeah, it did pull back.
But it's still a probably a bullish environment. It's still a order flow still to the upside.
Yeah, order flow still to the upside. So pretty much we're in this backdrop where there's risk aversion, there's lingering fear over the debt ceiling, but we also have some news coming out later today. So let me just go to the economic docket real quick. For the sake of time, I'm just going to go to daily FX. And let me do this. Okay, well, right here, let's just do this. Go straight to the calendar. And we're going to go down. And you can see there's not really much on the docket. Like, even though we have weekly crude oil inventories coming out in about an hour. Yes, we follow it, but since it's weekly data, since this data print comes out every single week about where oil inventories, how much draw from the stockpiles were there in the previous week, the market doesn't pay too much attention, doesn't create too much volatility. But we have to look at a plethora of prints from the weekly crude oil inventories that have a consensus on, how oil should go. But let's scroll down and see what's on the docket. Major news that is coming out for today is the FOMC meeting minutes. Now, this is the meeting minutes from, I think, the May 2nd Fed monetary policy meeting that we had at the beginning of the month. And the reason why traders are going to be focused on this report is simply because they're going to assess, okay, what changed between then and now. You remember back then when the Fed did their recent rate hike, they said, well, we're going to stop, we're going to pause for now, and we're just going to monitor the cumulative effects of the rate hikes that are still in the backlog. And if we do see changes and adjustments or anything shift, then we'll be willing to tighten again. But for now, we're going to pause. So then the Fed signaled that in the beginning of May. But recently, within the past week, we've been hearing a plethora of Fed presidents, Fed regional governors and regional presidents come forward and say, we may need to tighten some more. We maybe need to do more rate hikes. So this is a huge switch, a very distinct switch from how the tone was, the consensus was in the beginning of May versus how it is towards the end of May. So we're going to see, okay, what led them to think that rate hikes could be over and that this would be a good time to pause. So we'll be looking through those minutes. Of course, we got to keep in mind that this is a rear mirror view of the market, since this is based on the monetary policy decision from May 2nd or earlier in May. So that we've got to keep that in perspective. But this could also give us an idea into their frame of thinking on why they decided to hike and think that they were done. So yeah, this is pretty much what markets are going to be looking at and focusing on. So then a lot of the volatility may be restrained until this announcement comes out, or until this statement or the meeting minutes are published. So then keep that in mind. That'll be in 4 hours from now, 4 hours and 50 minutes from now. But yeah, apart from that, we don't really have much on the docket. This week was a pretty well, we didn't have too many central bank I guess meetings and announcements. Yeah, I know for tomorrow, I think we do have, I don't know if it's GDP tomorrow, but we have core PCE that's coming out as well. And
that's
I think
Friday, right?
Yeah, that's Friday. And I think we do have advanced GDP in the United States that comes out on tomorrow. Let me see real quickly if I'm correct, but we have German GDP coming out, but let's see. Yep, we do. We have advanced GDP that comes out on tomorrow. So then that's definitely going to, have an impact, because this is really the most important data print, because it gives us a forecast into what second quarter, how the second well, I think no, this is the second estimate. Okay, this is different. This is the Q1 second estimate for Q1. You remember there's three GDP announcements. There's the advanced, there's the preliminary, and why am I forgetting the third one? There's three of them. So this is the second estimate, which I think could be the advanced GDP print. But yeah, that'll be coming out tomorrow, and on Friday we'll end the week with personal consumption expenditure, which is the Fed's preferred inflation gauge, and also University of Michigan consumer sentiment coming out on Friday as well. So then, yeah, so pretty much the markets are sort of going to be trading around this, and even any other additional earnings data from stocks. We're approaching the close of earnings season, so then that's not having too much of a significant impact on where asset prices are moving, but we still have to pay attention to some of the other earnings data and earnings announcements that are coming out. But yeah, just like we always say, you trade what you see, not what you think. So even though it may be hard to follow all of this data, just trade pure price action, because really the fundamentals and what the economy is communicating will bleed through where price action will go. It'll eventually pass through price, and we'll see it visually plotted on our price chart. The current sentiment, how the economy is moving. What is the market bias and market sentiment? So then we could just follow our charts, and that would pretty much help us. So yeah, so let me just go back to the charts and actually pass the mic back over to my brother so he can continue with today's session. And I think he's going to cover some of the stock indices.
Well, yeah, I may do that later, just to reserve time. I'll probably cover that later, but as Marvin mentioned, stocks are selling off. The NASDAQ is selling off, so order flow is definitely to the downside. So if you're interested in trading those stock indices, look for opportunities to sell. That's what I'm going to say for now, because we can end sort of early. I know we want to meet in the private war room later on. I think Marcus is going to be in there in a little bit. So I would highly recommend that you guys come into the private war room. We've been executing some solid, decent, good trades in the room. So if you guys want to contribute, if you guys want to benefit, then by all means, you can come and join us there. But all right, I think that's it. I'm going to just end this a little bit early today, just to give you guys some time to just maybe take a break and then head into the war room. I'll be in there within the next maybe 45 minutes. So you can just look for me then. But Marcus should be in there in a little bit. But thanks everyone for coming. We really do appreciate you guys. And as we always say, remember to always count your blessings, not your pips. And we would definitely talk to you soon. Stay blessed, stay encouraged. And yeah, we'll see you guys soon. All right, get him, bye.